recording mode. Oops, it started. Hold on one. Good afternoon. This is Fahmy Hemzi. It's 4:33 p.m. June 21st, 2016, which is the first day of the summer. Welcome. Today with us is Michael Bly. I've known Michael about 4 years, maybe 5. Done quite a bit of work in the agriculture area and S&P futures, and used to work on the floor of CME. And as recently as a few months ago, he was his desk was only a step away from the edge of the S&P pit. So I've known him. He's a pretty decent guy. Came with highly recommended from George Cavaligas, our bond guy, and it's a pleasure to have him. Before I get started, quickly, this webinar will be recorded, as most of our webinars are. The ones who aren't are recorded, but really for members, and they will be posted on the members area. This one will be posted at on this location, educational webinars. It takes us about 50% to 75% of the time of the recording to pre-process it and post it. The format we are posting is MP4s. If you look at them, you'll see they're MP4. They're pretty much the standard with GoToWebinar, and good thing is that you can play it on anything. It's pretty much standard on all browsers. You click it and go. You really don't need a player anymore. It's embedded. In terms of housekeeping stuff, Admiral joined us, and I'm honored to also to mention that we're doing some work on SIBO TV and CME Radio with help of Admiral and help from our friends over at CME. It should be nice area to get challenged and be exposed and do unique work. Both of them both initiatives were approached by them. We had, we of course always have contact with them before. As you know, you see them. I've taught there before, and here, and you'll see them. I've done our blog posts are very, very popular. Especially this last one has been a big, big hit, according to their staff. But good things coming on that route, and also as a part of our transition here. Let me close this. Ethan is moved laterally to support what Admiral is doing with his strangles to doing pure research and help Admiral in trade generation and trade ideas, both pre and post EPS. So I'm excited about the upcoming earnings season. I think should be off the charts. As you can see from the trades that Admiral has managed, one of the largest trades in SIBO history. We've done very, very well. We have had a couple of hits here and there, but that's part of trading. What I think looks like today we did really well on Microsoft. We probably close that position tomorrow. Having said that, PMT has been very, very busy. The proactive market timing, and then of course, just recently we had a change of technology at HFT Forex, and this is a negative order flow algo, which is outstanding. It has a near perfect negative correlation to equity markets. So last week it did great. In February and February and January it was awesome, and so you'll hear more about that too. And but we now move the technology to a much more mature trade copier using VPS technology, so that all accounts trigger at the same time within milliseconds, 24/6. Yeah, it's no longer really available to trade self-directed. You need to do it electronically. It's fully auto-traded, and it's because run by a sentiment. The algo itself picks it up. When the move is on one side heavy, it picks up the other side based on order flow. Yeah, of a major Forex FCM. So we're very excited. Growing pains quite a bit. Hours are not very good. I sleep very little. Florida is great, but between Admiral and Dave Kaplan over at Forex, Ethan and Michael and Brad, they keep me busy. Meantime, our OTF is all-time high traffic. we have a number of people now signing up from the inside, from the pits of a CME, using our technology with a handheld, with a Surface. Obviously, it has to be Microsoft Shop. Everything we do is Microsoft. So very pleased with that. We introduced gold. It's been a while to have a webinar, so I'm going to this extent. Gold, volatility, which is VX, crude, FDAX at night, and Euro stocks, plus ESNQ, and now we've started ETFs. And then when we get to next thing we're going to do is put Microsoft Cloud on, so it shrinks our lag in the audio to about what CNN, ESPN are going to be, which is about a 1 second. And then after that, we'll have V3, the version 3 of the desktop, will allow us to have rooms on the fly, and we can open a room for, and our plan is to open a room for stocks OTF. So we're to see the footprint of big players in the stock arena. So I will basically do high volatility stuff, the FANG and so forth. But great stuff happening, very excited. But the only problem is that I need to email the guy upstairs and say, can I have like 26 hours a day? I'm short a couple of hours, that's all. Anyhow, glad to see you all here. Why don't we get this show started? Let's see. Michael Blind really doesn't need a lot of intro, but you've read in the comments for the webinar. But you like his style. It's very methodical. His morning, we've been posting for a month. We've been posting on the blog. This is our blog is hamzyalex.net. His commentary goes up there in the morning. There we go. And he's getting fairly good hits there. And we've been putting out there, and you'll see his levels. The levels have been killer levels. There are not too many detailed levels. There are crucial levels, okay? So you'll see the market goes there, stops and reverses, type of a deal. How he does that? I think he switched to tuna sandwich following Tico. Yeah, Tico is a big tuna lover, and since then I think he's being served tuna sandwich, and we're glad to have him. All right. With that said, let me send the controls over to Michael. Michael, is all yours.
All right, thank you. First of all, confirming that that I'm audibly heard.
You're fine.
An audio check. Okay. And that I'm showing the right screen. The screen that I desire to be showing is the one with the landing page for the webinar link.
Correct. This is the sign-up page, registration page. Correct. You're good.
All right. Okay. Very good. Thank you. Underway. Thank you, Ferry, for hosting this event. Thanks to all of you for attending this event. I will answer every relevant question. Some of them may be at the end of the webinar, unless if I see something that captures my attention in real time. But again, thanks to all of you for attending. Now, I'm not as an engaging person as Ferry, so I will compensate by getting to the point and keeping it as relatively short as I can. But nothing here in this webinar is a solicitation to buy or sell any securities or futures contract. We advise that you do your own homework and research. The examples or charts are for entertainment purposes, and past performance is not indicative of future results, and it's always best to consult your financial advisor before trading futures and options. With that behind us, I've got some images to show. I was intending on putting these in a slideshow, and I didn't, so I have some corny links just to give some visual. This is not an apology, but just an observation. I'm not a very sophisticated guy. Somebody asked me one time what my trading methods were, how I traded, and the only way I knew how to answer was to say I buy when I believe the market's going to go up, and I sell when the market is going to go down. My background, educational-wise, Some of my early experience and some of my mental cape-up is more philosophical. And so my approach to the markets are more philosophical rather than scientific. And I think both approaches are good. They both can lead to good, but both approaches can also get you in trouble when trading. It's good to have a scientific method with trading, but it's also good to have a great deal of art. Trading is both science and art, and I found in my experiences of observing other traders that the best traders are those that can merge the science of trading with the art of trading. So my presentation is more of a philosophical approach to trading rather than a methodological one. And what I give is the accumulation of years of experience, my own experience, and having worked with some very successful minds and also some less successful minds, and I've learned much from both. So trading with risk management, psychology, and emotions on your side, it's the overlooked, often the overlooked part of trading, because many are going to be tempted to overlook a subject title such as this and pass on it because it's simple terms and straightforward, and most people see it as elementary and not complex enough. Most people are trying to learn how to trade and passing over the key elements that are required to trade. Some of you may recall a YouTube video a few years ago. I was going to show it, but the language in it was a bit too crass. But it was this famous video that circulated for years on YouTube of a trader who blew up his account, and he was on video, and he was very dramatic, very uncontrolled, and threw a fit. And it's often the example of how psychology, emotions, and risk management are not on your side and become enemies when not used properly. You know, I was thinking, I was talking with a gentleman earlier today who has a analysis that he sells on a daily basis, a very good trading analysis, and it's been promoted and he's been unable to sell it. And my response to his question was, people tend to want arrows, that people are willing to pay for arrows more than analysis. Most of us, we don't want to have to think, we'd rather have it easier. And trading becomes somewhat like a video game to some of us. It's much easier to risk $100 or $200 when trading a futures contract than if that money was in your pocket throwing it on a casino table. But fortunately or unfortunately, we get an evaluation every day in our daily statements, every month in our monthly statements, and our trading profit and loss is our progress, it's our journal, and it doesn't lie. I was talking with a gentleman a few days ago who was a former Lehman banker who worked on the inequity sales with hedge funds. And he mentioned to me that 7 out of 10 funds that they worked with would fail in the first year. And of the 2 that succeeded, out of the 3 that succeeded, 2 of them would fail in year 2, and only 1 of them that they tended to work with would survive. I mean, ever hear that trading is a zero-sum game? I mean, how do we survive when the hedge funds are not able to survive, when most of the funds missed and underperformed the S&P 500 last year, which basically closed flat on the year? How do we survive when many of these are unable to survive? But trading, it gives us an opportunity to identify weakness on a daily, if not hourly basis, and adapt. We have to adapt to the personality of every market. It's my opinion that you cannot trade today the same way that you trade yesterday, and tomorrow trading has to be different because every day is different, and the personality of those days are different. One of my favorite quotes from Sun Tzu in The Art of War is that every battle is won before it is fought. And that's worth a webinar in itself. Every battle is won before it's fought. And I think when applied to trading, a lot of times I like to take Sun Tzu's quotes and apply it to trading and say something like every trade is won before it is entered. Because I think a great deal that affects our trades are the risk management, the psychology, and the emotion that we have to deal with and that we have to battle before the trade is already placed. We tend to want a system or a method or a particular trade or a particular kind of chart. But I have known traders who could read charts far better than I can, that had perfected indicators and knew those indicators so well they could tell you what every crossover meant, what every touch meant, all of the technical issues. They could pass a CMT exam and become a chartered market technician, but they would lose money week in and week out when they were trading because while they mastered some essential elements, that they failed to master many of the necessary elements to trade. Yeah, I was thinking about this last night, the idea of trading and a pilot in a cockpit flying through clouds as the sun has departed and set, and the pilot is not able to see, but there's clouds in front of him, and it's nighttime, and it seems to be a very intimidating presence in an environment to operate in. But what a pilot has to trust are his navigation through the clouds. That the navigation is what gets him through the other side, no matter how dark it is or no matter how cloud it is. And when we can master the emotional and psychological side of trading and build a system that enables positive emotion, then I believe it helps us retain stability and confidence even during downtimes. 2 weeks ago, for me in my personal account, I made about 30 handles on regular size. Then last week my performance goes to 10 handles for the week on my size. I traded at 1/3 of the profit. This, I don't know what will come this week. I don't know what will come next week. But wherever my profit and loss is, I believe that I have the confidence to remain stability in the market even when flying through the clouds and flying through darkness. You see, failure, most obviously, it often creates a lack of confidence. Then a lack of confidence creates fear. And we look at soldiers. My father was a Vietnam veteran, came back to home with post-traumatic stress disorder, and during that time they didn't take things like that as serious as they do now, and he went undiagnosed for years. And a soldier returning from the battlefront, and it's not limited to a soldier. I've known women who've been in abusive marriages. There's so many examples of how one can end up with PTSD. They cannot live healthy, and everything that they see is skewed. And I think a lot of new traders, even I've seen seasoned and veteran traders, end up with a form of trading PTSD, where they have a traumatic experience. They might blow up account, they might blow a very good trade, they might handle something wrong, and they're unable to overcome that. And then every trade after that one is an unhealthy trade based on an improper set of emotions. The surgeon trained for precision in his cut, knows exactly the instrument to use, knows exactly where to cut, can cut very well. But no one can teach from a standpoint of academia the stress of being a surgeon, the stress of having somebody's life in your hands, the stress of having to make a decision that affects another individual That can't be learned in mere academia. It's something that only experience teaches. That the police officer knows the rules of engagement, knows his weapon, but only experience can teach him to deal with emotion and when to use force. And oftentimes with trading, we learn that side of methods and systems, and we know what a chart is telling us, but only experience can teach us the emotional side, the discipline side. I mean, at the end of the day, it's my belief that a trader can be successful with nearly any methodology: Fibonacci's, moving average crossovers, reading bar formations, you name it. I think that a trader can be successful with any of these systems if they can master the emotion and psychology behind trading. I mean, how many times do we keep falling into the same mistakes? And oftentimes it's not our systems. Our systems may give a signal, we'll take it, or we'll take it wrong. We don't manage the trade well, or we talk ourselves out of taking a good trade. The problem isn't with our system. I mean, systems are a dime a dozen. There's more systems and rule-based trading available now than ever for traders. But still, by and large, traders are not making money. Here's an image of a chart that's been on the internet for a long time. I wonder how well this guy is doing, how well this trader is doing with his trading off of his chart. I mean, we keep wanting to put lines on something, a new indicator or on something, in the hopes that that's going to turn the corner and create success, when oftentimes the problem isn't with the system. They're a dime a dozen, but the problem is with the rules, with emotion, where we either get into a trade too early or we get into a trade too late. Our stops are either too wide or they are too narrow, and traders end up with a form of post-traumatic stress, and that they can seldom be retrained. Over the years, I've talked with a lot of retail traders who wanted to get better, who they were not successful, and they wanted to get over the hump, and they wanted to my help. One thing that I found is that they will come wanting for help. Whatever they had been taught was not working, but they want to combat whatever you were telling them by trying to impress you with what they had already learned, that they had already failed at. It is very difficult to retrain the mind of a trader. I met a guy a couple of years ago who had been trading futures, and his target was something like 2 ticks on this future, and it wasn't something with a high tick value. And his stop was larger than those 2 ticks. His stop was something like 6 ticks or so, and he had done very well on a simulator, and he began to talk about quitting his day job. And I encouraged him, until you know the emotion, until it's your bread money that's in your account, that's on the line, the money that you pay your bills, and then you have to go into the next trade still carrying the side effects, the residual effects of the last trade. Until you have experienced this, the simulator, it cannot prepare you. Scared money is very, very tough to trade on, and you cannot simulate emotion. There was a movie, Down Periscope, with Kelsey Grammer. I forget this lady's name. Anyway, and Kelsey Grammer was the submarine captain, and this lady was his dive officer. And when they took the submarine for a dive, it was a comedy movie. When she took the sub down on the dive, and he was questioning her concerning her abilities. She said to him that she had scored higher than him in the academy on the dive drills, the dive simulations. And he said, well, a simulator is not a boat. You never hear of brave men and their proud simulators. and how true it is. It's that simulators can make us very, very proud. But simulators aren't what wins the war. It seems real easy on the simulator. I remember after 9/11, and I was watching airline stocks, and every day I was paper trading these airline stocks. I was still a teenager, and I would say, if I had this money, I could have done this, that. When I was reading yesterday's chart, I knew exactly where to spot the high of the day and the low of the day. I watched oil stocks, knew exactly how to spot the high and day and low of day. I was brilliant at technical analysis looking at yesterday's charts. I was flawless on the simulator, but it wasn't until my first live trade that went against me that I began to understand the emotions that surround trading. A few weeks ago, I spoke to another guy who he had a EA running on a Forex account, and it had had a good month, and he was going all in. He was betting the farm on this thing because it had a good month on 2 weeks performance. And I said, be careful. And after the first day, he was up something like 200 pips. And so he added in full size, and then it dropped 500 pips the following day. I've learned that success has a very blinding effect on us, as does failure. This is why I create rules. And let me say that rule-based trading was very hard for me, to where I had to write these rules down, print them out, and take them to my monitors for years until I learned them and implemented them inside of myself to where I was able to follow them. I mean, after one trade, I stand up, stretch my legs, refill coffee. I can't do a push-up, but if I could do push-ups, then I would. Because it's good to take a breather after every trade, because I think that we are always somewhat skewed by our most recent experience. Have a successful trade, and it makes us want to jump in quickly on the next one, because if we were successful last time, then we're going to be successful again. If we got out too early, so we want to jump back in. With success, it makes us want to lose our requirements for trading. Failure does the same thing, but in an opposite way. It makes you lose sensibility. It makes you lose credibility. You no longer have the same standard. How many times do you get stopped out of a bad trade, and the first thing we want to do is jump back in because we say we got out of it too early and now it's beginning to work. And then, so we've exited out of loss. Now we jump back in because now it's going to turn. And as much as it looks like it's going to turn, it doesn't turn. Fear and greed. Every trade, every day, every week has to be treated with the same emotion. Last Friday after the close, a friend called me, asked me how my trading day went. I said I had a 10-handle winner on the day. And he said, well, you don't sound very happy about it. I said, well, I have to treat it as I would if I had a 3 or 4 handle losing day. It's a day's pay. We cannot become attached to any of this. We cannot become attached to yesterday's winners. We can't become attached to yesterday's losers, because they're not going to be what pays the bills tomorrow. Fear and greed. Well, why is it that we constantly talk ourselves into remaining in losing trades? And we will pull our stops even. And we find when it comes to losers, when it comes to trades that are going against us, we find every reason in the world to negotiate with that trade. Traders, when we are in a losing position, we become optimists for some reason. We begin to see the glass half full. It's going to go back up. We want to prolong our losing trades in order to come out correctly. But when it comes to the winner, when it comes to a trade that is going well, we tend to take those profits as quickly as possible. Seldom do we have any negotiation on winning trades. We take it and we are happy. If we're losing, we widen our stops, and if we are making money, then we limit our targets. It's what many of us have done. It's what many of us do, and I don't understand it, but I've done it myself. We add to losing trades. Never do we add to winners. We have reasons to hold on to losers. We have reasons to add to losers. We have every reason why a loser is going to end up winning. But when it comes to winners, we're mute. We're willing to move on to the next trade without giving it its proper due. Greed and fear. That they will lie to you. They mask our objectivity. That they make us do things that we don't want to do, things that we know better than doing. Greed, is what causes us to hold on to that loser, or it's what causes someone such as Bernie Madoff to Ponzi people's accounts. Greed is what causes a bank like Lehman to maintain a stubborn stance and not sell to a buyer when they had the chance, and go into bankruptcy court and lose everything. Greed says to us every time to negotiate our principles, and then fear comes along and says, if I don't take this winner, then it will abandon me, and I'm not going to have another winner. Greed and fear, it creates optimism and pessimism unnecessarily. The kind of optimism that my friend, when he went all into that EA trading his Forex account, that same kind of optimism that said I'll go all in, now he'll be pessimistic and he won't ever get into a good thing again. Optimism will get us into our trade and widen our stops and give it room to go against us. Pessimism will have us say, I'll take a winner at 2 ticks of profit. And many traders end up trading. They will risk 2, they will risk 3 in order to make 1. And some of us do it, we do it knowingly, we do it intentionally. I've known some that have systems that are based on risking 2 or 3 or more just to make 1. One thing I've learned is that risk to reward is key. Years ago, I met a guy on the CME floor, used to be a head analyst, technical analyst on the floor for an institution. And he said, in all of my studies, I've learned that I have to have a 3-to-1 reward to my risk on every trade. And I was quite a bit younger, much less mature when it comes to trading at that time. And I thought he was nuts. I thought that he was nuts, and I thought that I could make it in trading while risking 2 to make 1. That's what I was doing. My wife is sending me a text asking me if I want dinner, and let me tell her no, thank you. I apologize for that. I thought that I could make a living risking 2 to make 1. How crazy is that? I look at it. You risk 1 to make 1. You have to be right 50% of the time. But then that doesn't include commissions. Then there's exchange fees on top of that, clearing fees. Then we have our data fees every month. Many of us have platform fees. Then there's other fees that different ones have, charting fees, and some of us have to pay a 10 or 20 cent to our platform for every fill. And so to be with a 1-to-1 risk reward, probably have to be 55% to 60% to beat all of those fees. For some, that's not so bad. But then you go to 2-to-1 risk on your reward. You risk 2 to make 1, and you have to be right nearly 70% of the time to break even, or 75% of the time just to beat the fees and commissions. That's not profit. That's just fees and commissions. When you risk 2 to make 1, you have to be right over 80% of the time just to be profitable. Now is 80% obtainable? Perhaps, but for how long? Day in and day out, week in and week out, month in and month out. Can you maintain that 80%? You look at Cam Newton, the MVP of the NFL this year, went to the Super Bowl. He had done it day in and day out all season long, and in the playoffs, the Super Bowl, he didn't look very well. This year's NBA Finals just ended Sunday night. Stephen Curry, 2-time MVP. I mean, the guy can play. Was ejected in Game 6. Didn't play well in Game 7. As good as Stephen Curry is, he missed it during this Finals. LeBron James, who he had a bad start to the Finals, came on strong at the end. But even MVPs have a series or a game that they will miss. And when you're trading, risking 2 to make 1, what happens when you have a week when you lose 60% of your trades? In that case, you have to be at 80% accuracy for the rest of the month just to crawl back to even. But let's say you risk 1 to make 2. Risk 1 to make 2. And you're correct 50% of your trades. Then you're making money month in and month out. If you go down to, if you're risking 1 to make 2, you go to 35% accuracy and you're breaking even. Personally, I like that. You risk 1 to make 3 and you go to 30% accuracy, you're still taking home money. One thing I noticed that it took me a long time to understand when I worked among traders, the best traders that I knew, the guys who were making the money, some of them are only right on their trades 25 to 35% of the time. I wanted 8 out of 10 times. That was my goal. But these guys were right 25 to 35% of the time, some of them, and they were making money hand over fist. I didn't understand it. We probably, many of us in trading, we know the great Dennis Gartman. He happens to be an acquaintance of mine. I'll call him my friend. Maybe he would only identify me as an acquaintance. We get lunch periodically at his country club. It doesn't take a genius to realize that Dennis Gartman gets an awful amount of press. And one time I asked him about this, and over time I began to understand his trading style. He told me one time that his best year at one point in his life, his best year when he made the most money, and he was in profit, was when he had 90% trades that had lost. He was only successful on percent of his trades. Now, I'm not trying to get into Dennis Gartman and having a conversation over who Dennis is, how he is, his calls. He's made some calls. He's his own worst enemy, if you ask me. I'll admit that. But I think there's something to be said about trying to trade, taking a quick loss, identifying quickly when you're wrong, and when you're right, riding that trend out, adding to it along the way until that trend is exhausted. And that is how Dennis makes money. Now, sometimes this means having narrow stops. I think many traders in the S&P futures were taught to have about 3 handle stops. The average pullback, if the market is moving up, though, if the market will move up 5 handles and move down 2 or 3. It'll move up 10 handles, then down 5. And so depending on where we buy, it is a very good chance that we're going to get stopped out on a 3-handle stop. This is a chart that I made years ago, and look with the chart of the S&P 500 from 2 days. Each of these lines measures a pullback of 3 handles during these 2 sessions to the exact tick. There was others in here that were 3 1/4, 3 1/2, 3 3/4, or 2 3/4 that were close to 3 ticks. But in 2 days of trading, this is how many were exactly 3 ticks back. And the thing is if we're using 3 handle stops, then oftentimes I think that a lot of these algos that we hear about that search after stops, they're looking for a 3 handle pullback, a 4 handle pullback, than a trend continuation. Personally, for me, I'm on 75% of my trades, I'm using 1 to 2 handle stops. If 3 handle stops are what gets triggered most often, then in my opinion you have to either widen your stops and narrow them, or you have to widen them or narrow them. And me, I prefer narrowing them. Do I get stopped out early? Yes, absolutely I do. But do I save myself from getting stopped out from wide stops? Absolutely I do. Every day, stops are just part of doing business. Today I made 7 trades, all of them placed in the index futures room. I only made money on 3 of those trades, and in fact 2 of those trades only made about a handle. But I ended up positive on the day, meeting my minimum quota, called a 5 handle winner at the end of the day. And even though by and large my trades were unsuccessful on an individual basis, overall my day was profitable because I took a quick stop when I was wrong, and I let the winners ride. You have to add to winners, not to losers. Most of us don't have the sophistication to add to losers in the first place, myself including. And I found one tendency amongst traders is to throw a one-size-fits-all into the market. That is not so. You want to adjust your size. You want to consider your size every week, every day, and every trade, because there's certain days when you want to trade with less size. There's certain trades when I'll get in, but I don't feel as good about a trade, and so I'll trade with smaller size. Everything is weighted. You don't have to throw your largest size in. I went into this week not knowing that I didn't have as good of a feel for this week as I've had in prior weeks, and so I've traded at about half size while keeping my stops tight. But by not going in on your full size when you are having a bad week, then you can survive. Going back to Dennis Gartman, as many bad calls as we know that he's made, if it's true that from what he said, what he told me, that he loses 75% of his trades on average and he still makes money, if that's true, then I think that anyone can draw random lines and use good risk management, moving average crossovers or whatever, and be successful. Counter trend trading can be quite addicting. I worked for a guy before who said I cannot buy a high tick, and he said I cannot sell a, and I learned through him and fought the market for years trying to buy bottoms or sell tops. And you know, when we trade exclusively this way, then we're stepping in and saying everybody else has been wrong, and I know where it's going to turn. And in my studies, counter trend trading probably going to be wrong at least 2 out of 3 times, and that is okay. That is okay. But the problem is with the management surrounding counter trend trading, because we'll lose once 2 handles, then we'll lose again 3 handles, we'll be down 5 handles, and then when we finally get it right, we either won't take the trade or we'll take a profit at 3 handles and still be lower. When I've learned that when counter trend trading, we have to adjust our size, trade smaller if you're trading against the trend, leave enough room to take a quick scale because you're going against the trend. So take a quick scale, get paid, and then aim for higher. If you're trading a counter trend trade, then you should at least be able to aim for 5 or 10 handles. If you are finding a market bottom, then it ought to at least bounce that 5 or 10. Personally, I don't prefer range breakouts except on the opening range, depending on volume and other factors. I prefer to stay with the trend defined by higher highs and lower lows, not what I think it ought to be. I go with my largest size when I'm buying pullbacks and uptrends or selling rallies and downtrends. That there's an old saying that everybody knows, but it's so common that we become callous to it and we often neglect it. But that saying is the trend is your friend. But we often want to focus on how oversold the market is or how overbought the market is. Here's a quote from that says, markets can remain irrational a lot longer than you and I can remain solvent. And that says enough right there. But we become too biased as traders, and many traders, we become conspiracy theorists that there are forces behind the markets, and that's explaining why we are wrong. And we have to have a reason why. I've learned that idealists don't do well in the market. Economists don't do well in the market. One thing Dennis Gartman told me is that having an economic degree is the worst thing you can have when trading the markets, because in the short term, markets don't cooperate with economic theory. I think this is why a lot of institutions are now looking for people with history degrees or philosophy degrees or such, because an economic degree makes you too opinionated and too much of an idealist rather than a pragmatist. The Wharton educated, those educated at the Wharton School of Business, they're not taught the psychology behind trading. And at the end of the day, what difference does it make why the market is going up? So what if it's Fed induced? If it's induced by the Fed, you can either ride the uptrend or we can stick in our 3 lot or our 5 lot and short it, thinking that we're going to correct the bubble. At the end of the day, the trend is your friend. This is why small speculators have been record short the S&P 500. Here's a chart from Sentiment Trader showing small speculative positions and a chart of the S&P 500. Look at here, that they're record short or near record, started shorting as the S&P was finding a bottom and riding up, and they've been shorting ever since. Because we hold on to our theory that the market is unhealthy, that there's economic instability, and we try to fight it, and we try to fight it, and we keep getting beat up. I know a guy who ended up being short an average 100 minis at a 20-40 average. Twice he had an opportunity to get out of that position at even, and he didn't, because once it started coming back down, his fear was supplanted by his greed, and then he doesn't take the opportunity, and then the S&P shot up to 21.19 3/4, I believe it was, a couple of weeks ago on the June mini. And I wonder, how do you sleep at night? I used to trade about 1,000 SPX option spreads per week. I mean, it's about $1 million worth of spreads, and I couldn't sleep at night. And the question of trading is, at the end of the day, can I live with myself with any trade I take and say that I gave it the best shot, or am I going to be upset because I knew better, I knew that I was trading on the wrong side, but I always had a reason to hold on to the trade. You see, there's always a reason to take a trade and a reason not to, but we have to let the reasons stack up in our favor before we take a trade. If we have to talk ourselves into a trade or constantly analyze our trade, then we probably ought not be trading. If we end up having a losing day as a trader and go home and talk to our spouses nasty, and we can't control our emotions at home, that we're doing something wrong. Risk little to make much. If you're wrong, don't fight it. If you're right, move a stop to break even and let it run. Hold on to it long. Take a quick scale, then hold on to until the target arrives. Patience is a virtue. I often say this in the room, and I'll close this down shortly. Patience it only comes with experience. There's times I identify with myself, I lose it, I overtrade, I fight the trend, I trade on emotions, but I write down the rules, stick them on the monitors, have flashcards to remind me, because it is difficult to keep emotions in check. It's why when we are young and in love, we will do things that are crazy, that don't seem right, because emotions have a way of controlling us. And while many try to impress with signals or systems, my methods, I believe, are based on intangibles and not unique, but a lot of traders have them, such as discipline and psychology. It's not as sexy as trying to sell an indicator, and it's less spoken of because it's easier to sell arrows on a chart and indicators than it is to sell self-discipline. It's easier to sell the technical indicators than it is fundamental ideas of what it takes to be successful traders, things that challenge us. It's sexy to talk about methods, entries, and risk management is boring. And most of us don't have the size of accounts to be able to learn proper risk management through the hard way. There's a reason why maybe as many as 90% of traders fail. And it's not indicators and it's not charts. There's more tools than ever, more information accessible to the retail. We have information that only institutions could get years ago. The answer, I believe, is to understand risk and to learn risk. It's the idea of learning risk. It's why a retired newspaper editor that I know, he's unable to trade. But I remember in Chicago on the floor that there was a gentleman who used to be a member of the Latin Kings, came from the floor as a runner, then as a clerk, and then became a trader. How could he do that? Because he understood what most people couldn't. Being a member of a gang, he understood exactly what risk is. Now, in my opinion, just gave you the Holy Grail. I gave you my Holy Grail. That's my opinion. I can tell you the indicators that I can use, but I promise you that your charts are likely to be more impressive than mine. Movie where Charlie Sheen and Gordon Gekko, they're in the the club together, and he says, "Get dressed, and I'll show you my charts." I'll show you what my charts are, but everything is built off the idea of risk management, and I don't have much to say about my charts, so I can get through it in about 2 minutes. Every trade that I take, it begins with the idea of time. Another quote of Sun Tzu: "He who knows when he can fight and when he cannot will be victorious." Time needs to be on our side as much as it can be. What time of year is it? What time of month is it? For 2 years, I tracked statistics following non-farm payroll weeks. There was one period of time when 16 out of 18 weeks post non-farm payroll, the S&P 500 was down. Was that a coincidence? Maybe, but I was able to profit during that time. What time of month is it? Is it the open of the month, when typically there's buying in the open, or is it in the middle of the month when buying tends to dry up? And or is it toward the end, is it expiration week when markets tend to go up, or is it at the close that if the market has been up during the entire month, there might be some weakness into the close? What time of the month is it? What day of the week is it? A Monday trades differently than a Tuesday, Wednesday, Thursday, and Friday. A Friday trades very differently. I've done statistical analysis that shows that it's difficult. Friday is the most difficult day of the week to counter trend trade on. So I look at the opening price at 8:30 Central Time, and I try to buy it. If I'm going to counter trend trade, if I'm going to buy a low, I do it in the first hour. The time of day, what time of day is it? This is just a little chart showing the Dow Jones performance intraday over a period of 10 years. Look at this. It has a tendency to bottom. It has a tendency to bottom during the time of 10 o'clock to 12 o'clock. Is when the S&P tends to bottom, or excuse me, the Dow Jones tends to make its high in the afternoon. Look at today's chart. What time did the S&P, this was Eastern time on this chart, what time did the S&P make its low today? I believe that it was at 10:15 Eastern Standard Time. They're on the 10:15 15-minute bar. Tends to make another low at 2 o'clock Eastern Time. Look at the afternoon low. Came just before 2 o'clock at Eastern Time, and then it rallied somewhat. Not every day is going to work according to this chart, but it's important to know the time of day. Am I buying at a good time of day, or am I buying at a bad time of day? I divide the day into three 135-minute periods. From 9:30 to 11:45 Eastern Time, 11:45 to 2 o'clock Eastern Time, 2 o'clock to 4:15. I do analysis for each period of this day going back for weeks, because I want to know if the market is rallying and it looks like a trend day on the first third of the day. Is it safe to short after the European close? Can I expect a little bit of profit taking into the middle part of the day? These are the things that I trade out of. I try to stay entertained during the day. No boredom. I try to do a little bit of exercising here at my desk. I try to manage other positions, long-term option positions and grains. I'll listen to music. I'll wait until there's multiple reasons to trade. Another quote of Sun Tzu, he says, victorious warriors, they win first, then they go out to war, while defeated warriors go to war first, then seek to win. I take this to trading as what it means when a trader has a reason to trade, then he will do okay. But if he's looking for a reason to trade, he's not going to do well. Trading to me is like the difference in fishing and hunting. When you're hunting, you're more aggressive. You are hunting something. It's more of an aggressive term. Fishing, you sit there, you relax, you throw your reel out, you wait to see what is biting. You're more passive. I believe that's how successful trading is done, a more passive approach. Let your trading come to you. There's some other things that I use. See here behind here, there's a footprint chart. What the S&P is doing on a footprint chart. Here it was trading down to this low. A large buy imbalance came in. Then on the retest there was fewer. The sellers came in larger, but then it bounced back up, suggesting that there may be trapped sellers there. I'm not here to sell the footprint chart, so I won't mention too much about it. I look at the book map, the book map here, showing where the bids and offers are on the S&P. I don't take a trade based on it, but I take a look to know what kind of support in the order book. This filters out the large orders, the ones that have been sitting there during the day, and so it gives me an idea of where the market's at. You want to see a chart? Typically, I just have a range chart with nothing on it but a VWAP. Here's a chart that I have, SPX chart, just two handle ranges. That's it. With Bollinger, with you know, the cash charts are underappreciated by futures traders. I did a study. The SPX produces about half as many two-handle range bars during a session than the S&P futures. They're the same. They're based on the same. Excuse me. They're based on the same movement, but there's more noise in the futures contract than in the cash index. And I like to compare the cash index, something that's more stable, when the futures are only a derivative of that cash index. I look at things every hour, the 10 o'clock hour. Well, how does the S&P usually perform during that time? From its open to its high, is it typically 4 handles, or is it typically 6 handles? These things are important during the day to me. As I approach every trade, I'll look a little bit at the volume profile. I'll measure moves by 10 handles. If today's going to be a up day, if it's going to be a trend day up, then it ought to move 10 handles up from the open. Therefore, if I'm buying the open, I need to look for 10 handles to take my ultimate scale. And somewhere during that time, it's probably going to pull back. Before it gets to those 10 handles, it's going to pull back 3 to 4 handles. That's the good opportunity to buy, perhaps. As soon as I open a trade, I look at my risk rather than looking at my profit. I cover the risk side rather than the reward side. Because I've learned if you can that and have simple methods, then I think most things will fall into place. Sun Tzu said, if you know the enemy and know yourself, you need not fear the result of 100 battles. And I take that as a trader. If I know the market, I know myself, then I don't need to be afraid of the outcome of 100 trades. I think using my risk to reward, risking 1 to make 3, in 100 trades, I think I can get 40 of them correctly. I think I can get 40 of them correctly, and my gains will be twice as much as my losses. If I know the markets and know myself, then I can get into every trade with confidence, because this trade isn't going to ruin me. It's not going to ruin my day. It's not going to ruin my system. Over the long haul, my risk-based approach is going to produce gains. I'll leave it at that. That's all I have. I don't see any questions at this moment. I don't know if some are going to come in, and perhaps it was not intelligible enough to have anything. Maybe the question is how in the world am I giving this webinar? But all jokes aside, if there's no questions, then I'll be turning it back over to Ferry. Are you there, Ferry?
Can you guys hear me okay? Can you guys hear me now?
Yeah.
I've been talking for a while. I didn't know you couldn't hear me. Sorry about that. All I said was that I'm a Navy guy, so I'm thinking about charts and targets and which standard missile you're gonna launch, and what's the payload, and you went into philosophy. That's awesome. That tells me I know very little. I gotta go back and listen to the video myself later on. I'll be honest up front. Now here comes a bunch of questions. Hold on, let's go through that. Go ahead. You've operated GoToWebinar. Just pull it out and see what we need to do. But I see Dennis Parmley there. Thank you. There's a question for you from Dennis. By the way, he's during the winter season. He's a neighbor of mine, but he should be back in
Okay.
Connecticut now.
All right. Let me go in order,
Please.
if I can. All right. For Zach Wickman, the time windows you mentioned, didn't hear them. Uh, would you clarify that? I mentioned a little bit about time. I want to make sure I answer your question correctly. If you wouldn't mind narrowing that down somewhat for me. My favorite trade. It's a general way of putting it. I don't know if you're asking this more specific, Dennis, but I like well the last few years since 2011. I like to buy a pullback and an uptrend on the S&P 500. I like to buy that's whether it's on a daily chart, on an intraday, it doesn't matter. That's been my favorite trade. Thank you, Zoltan. Kim, in general terms, how would you incorporate your stop loss on option positions? Okay, Kim, good question. I do trade a bit of options on a swing basis. Typically what I do is, I'll speak from my experience. When I trade on options, I have a wide target. And I don't like getting stopped out only to be right in the long term. I will buy cheap lotto options that I'm willing to live with if they go to 0, because I have a large target that's going to be 3 to 1 or better on a large move. Now, if you're talking about intraday, then that's not practical. What I would do on the intraday basis is I would trade the option based on the S&P chart if they were S&P options. I would enter based on the S&P chart the same way that I would if I was trading the S&P itself. Stop out of my options at that point. If I'm losing 2 or 3 handles, stop on the options and target the same way if you're talking about intraday. All right. Thank you, Zoltan. A repeatable idea, important time during the trading day. Favorite trading time. Okay. I can. Here's what I do. If I look at volume and price in Globex, and if there has been considerable volume, let's just say over 300,000, but not excessive amount, not anything like 400,000 like on non-farm payroll days. If the S&P, I'll give you an example. If the S&P is up 7 handles overnight on about 300,000 volume, or lately might have to look at that more closer to 275 or so, then I'm thinking, okay, this has a good chance of rallying on the open. And so I've got certain criteria that aren't technical enough to mention. I'll buy the open and I'll say, okay, this should at least rally 10 handles. I'll exit one at 3 handles profit, the other one at 5 handles profit, and the last one at 10 handles profit if I can. And so I'll look for a time of day, the open, to have meaning. This is example now, if the S&P is opening weak, I look for an early low sometime between, I'll use Eastern time, sometime between 10 and 11:30 Eastern time. The best lows I've found are typically between 10:15 and 11 o'clock Eastern time. If the market can make a low at that time, then I will try to buy it. If the market, if it doesn't make a low during that time, if it fails, then I'm looking at the midday, the middle third of the day, being a slight reversal, and then for the market to close the final third of the day like it opened. I try to stay out of trades during the middle part of the day after the European close, between 11:30 Eastern time and 2 o'clock Eastern time. I try to stay out of trades then. Not always. I have more strenuous criteria during that time. And so I'll typically look for some sort of momentum once Chicago comes back for lunch around 2:20, 2:30 Central Time. Today was one example of that. I went short during that time, stopped at a loss, at one handle loss, and then I bought, and that was when it pushed up to the 2085 area. And so I'll look for a movement during that 2:30 time to begin, and I try to hold it as long as possible. By the way, I'm happy to take emails, Michael at HamziAnalytics.com. If there's anything that's left unclear, then I'd be glad to clarify and provide more information. I don't want to give you 90% of me and then leave 10% out there in no man's land that's misunderstood. And so my time frames, they're all based on how Globex is, how the first hour is, how the first 15 minutes is. It's a little complex. Have a one-size-fits-all. Dennis or whoever asked that question, or was it Dan? Zach asked that question. Important time trading during the day, favorite trading times, something. Yeah, my favorite trading time is the first hour and a half and the last hour and a half. That puts that in general. Anything else?
Folks, this is last call. Anything else? Okay. Yes, sir. Go ahead.
No, it's just mumbling out loud, that's all.
Okay, no worries. Well, you've done a great job. It's very clear. This past month, yeah, it's about a month now, right? About last week of May, and then 3 weeks here. Tremendous difference I see in that chat room and the activity of people, a number of people, and interactions and the questions and your answers. And actually, people are beginning to post their trades. It's just been awesome. I really like that. Here's a very good question there from our dear friend from OTF room, Colin. Colin Cody is asking, can you post the slides? Yes, I will get, this is the Navy. We will get the slides and we'll post it for you. Not a problem. Well, I think they're a great slide, especially some of the quotes, when he was speaking about his methodology and the fact that the charts and indicators and all that, that's just exactly what I do, right? So it got my attention, like, hey, Farry, all you've done, your life is worthless. Just throw it away. You got to be doing this. And you know what? I'm sitting there scratching my head, I said, this young man come and join us is telling me all I've done in my life is worthless. Okay, fine. Let's deal with that with open mind, okay? First of all. So I'm serious. Listen, you know me. Michael, you know me. You know I call it the way it is. So that's going in my mind sitting here. Admiral texts me about something, and there was another gentleman. I said, look, I'm in the webinar. I got to watch this webinar. Forget about other webinars I've done myself or hosted for others. I got to watch this one. So, and as you walk more, there's a quote I learned from Brad's partner, Louis Porcelino. Love your losers. Love your losers, okay? That comes into my mind, and I'm thinking, how many times you did that? How many times you did this? Sun Tzu, you're talking about that. You're talking about the other traders you've talked to, all that. I said, you know what, Barry? All those indicators and quote, the subroutines and the strategies and all the things that we actually forced or pushed, or like with East England Trade Station, we need this, we need that. Go over there. I mean, I like in East England, I used to go and see Chuck Thompson. I would go and see him enough to they implement it. Okay, now I'm doing something with Trade Station because they're nearby. They're 45, 75 minutes away from me. So on me, I'm a type that I gotta get what I want. I would keep pounding until I get there. So and finally, they're putting some stuff in. The next version 15, will have some updates to their option program, Option Station Pro. It's what exactly Admiral and I have been working on for a number of years and now pushing to them to have. And they're going to finally release it. All right. So as all this going on to my mind, I'm saying, Barry, you're missing the bigger part of the problem. It's the psychology. It's yes, the stuff that Michael's talking about. So I was humbled today. Thank you, Michael. I got to go back and watch this webinar. I usually don't do that a lot. Very few webinars I go back and look at. Because even though I have full attention, most of the time I'm really paying full attention. I'm usually getting my work done the other time. This is the time which is kind of relaxed time, listening and learning something. But this one I got to go back. Because it wasn't the indicators. It wasn't where to buy, where to sell. It was a number of experienced wisdom words and lessons to get to know yourself as a trader. And I've been trading active, I'd say probably since my mom passed away, like July of '98. Very active. Before that was a touch and go. I had problems. And plus I was married. She didn't want me to trade. A lot of issues, but that was a kind of a breaking point. That's when my separation started. Also, I went to my passion, and this is my passion. But going through that, coming forward. This is something just gives me not the winners, not the winners. I'm talking about the losers. Love the loser, giving me flashbacks of different things that I need to work on. I could do. It's a journey. I have to improve myself. I gotta get better. I'm not there yet. I gotta get better, better. Because I'm measuring myself against myself. I'm not measuring myself against anybody. I'll never be Brad Sullivan, but at least maybe I can improve Ferry Hemsey, and that's what this webinar was. Thank you. Appreciate that.
Certainly. I don't know if you need anything else from me.
We'll just tell when you get a chance, if you send us those if you have a PDF snaps of these, you can make into send it to me or put it into a PDF and send it to me. I'd like to post it underneath. This is what we do here so you know. Let me take the controls back here for a second.
I just had URLs in my
okay.
Google Chrome.
Okay. Well, we could do it. You don't have to do it today, but you could when you get a chance, you could just do a couple of snaps on them, and kind of we can put into some slides. Oh, sorry. Let me come back here. What am I doing here? Okay.
I can figure it out. Sure.
Yes, exactly. Here, what I was going to show. Some of these webinars, you'll see we do it like not that, but there you go. Okay, we'll do 2 links. We'll do the download now. When you get a chance, you give me a slide, and we'll put it up there, and then we send a note out to the people who attended, say, hey, the slides are up. Okay, maybe even because it takes time. If you add just URLs, it's going to take a little bit of time, but by weekend, whatever. We have the next few days going to be slow. Other than Brexit, we're going to be slow. Okay. Any other questions? Thank you, Dennis. I appreciate that. You're great too. Any questions for us? You guys like to see an analog chart? I just did an analog chart. Hold on. 1 second. 1 second. Let me see what this is. Hold on 1 second. 1 second. Hello? Yes. Hi. Okay. I'm on the webinar right now. We have to talk a little bit later. Thanks. Bye. Sorry, guys. Bye. Hold on, guys. Here's what I'm thinking, guys. I was just looking at the analog, and I'll share that with you. My last comments for the day. Maybe something you guys want to think about. Hold on. This is from our PMT package. I'm just sharing it with you. One chart. This is a time shifted 2000 analog against 2016. look at the correlation factor. I mean, of course, it gets off here a little bit, but look at the peaks and troughs, the timing, and that's where we're heading. This is as of tonight. I just put these numbers in. Okay, keep that in mind. Great. I think we have great markets ahead until in terms of some challenges, and it's going to get even better come Labor Day. And this is 2000, so possibly maybe this is telling us we have a contested election this year again, like 16 years ago. So with that thought, I bid you farewell on behalf of myself and Michael and the rest of the crew here at MZ Analytics. Thanks for attending, and we'll have another event shortly. Good evening to all of you. Thank you, Dennis. Thank you, Ron. And thank you all. I'm closing the webinar now. Let's see. There you go.